Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CHUNLI Medical Interim Report. Beijing CHUNLI Medical Instruments Co., Limited, offers a wide range of medical products and services, including surgical implants, orthopedic medical, devices, joints and spine-related products, sports medicine equipment, trauma, and orthopedic surgical instruments, direct sales to hospitals, export services, ODM, original design manufacturer, and OEM, original equipment manufacturer. Bases: the company provides these services through various channels, including distributors and direct sales. CHUNLI Medical's stock price skyrockets. A year of growth and recovery over the past year, CHUNLI Medical's stock price has surged by 70.69%, driven by a combination of strong financial performance, market recovery, and favorable policy shifts. The company's robust interim results in 2025, with a 44.85% increase in net profit and 28% rise in operating income, were a significant factor in the stock's positive movement. CHUNLI Medical has also successfully absorbed the impact of centralized procurement, leading to rapid performance growth and stabilization. Its accelerated overseas expansion, driven by growing export operations, has contributed to its overall revenue and investor sentiment. The broader medical device industry is showing signs of structural recovery, with analysts forecasting a turning point in the latter half of 2025. Government support for high-end medical devices and reciprocal restrictions on EU medical devices have also benefited domestic manufacturers like CHUNLI Medical. The company's focus on domestic substitution and innovation has enhanced its competitiveness, while its receipt of FDA substantial equivalence for the XN knee prosthesis system in June 2024 signals access to significant international markets. Overall, CHUNLI Medical's growth can be attributed to a combination of strong financial performance, market recovery, and favorable policy shifts. The primary drivers of revenue growth or decline can be summarized into several key factors. Revenue growth, diversification of product portfolio, and expansion into international markets led to an increase in export business. Continuous growth in sales volume, driven by a stable supply of products under centralized procurement. Research and development of new products expanded the company's offerings and attracted more customers. Effective talent development and incentives motivated employees to promote company growth. Revenue decline, decrease in marketing expenses led to a 13.65% decrease in selling expenses. Increase in impairment provisions for assets related to contract costs negatively impacted revenue. Expected sales return decreased, indicating a potential loss of revenue from returned products or services. Overall, the company's revenue growth was driven by strategic business decisions and investments in product development and marketing. However, revenue decline was primarily due to decreases in marketing expenses and impairment provisions. Net income and profit margins. A shift in fortune. The financial summary reveals a mixed bag of results for net income and profit margins. On one hand, net income increased by 53% from RMB 83,069,962.55 to RMB 127,312,520.25, indicating a significant improvement. Similarly, operating and net profit margins also saw an increase, rising from 21.7% to 26.1% and 20.2% to 25.9%, respectively. However, this upward trend is contradicted by another instance where net income decreased by 59.3%, but a closer look reveals that this decrease was due to non-recurring profits being excluded from the calculation. In reality, the company's net income increased due to various factors such as government grants, gain from disposal of non-current assets, and other non-operating income. The reasons behind these changes are multifaceted. The company has implemented internal cost reduction measures and efficiency improvement initiatives, which have contributed to its improved financial performance. Additionally, the expansion into international markets has also played a significant role in boosting net income. Overall, the company's financials indicate a positive trend, with net income and profit margins on the rise due to a combination of internal efforts and external factors. The company's financial performance indicates a significant improvement in its ability to generate cash from operations. The current year's net cash flow from operating activities has increased by $210,544,271.62 compared to the previous period. resulting in a substantial positive operating cash flow of plus $141,486,383.10. This trend suggests that the company is efficiently managing its resources and generating sufficient cash to meet its financial obligations, indicating a strong foundation for future growth and stability. The company's debt level has undergone significant changes over time. Initially, total liabilities decreased by RMB 64,691,567.04, down from RMB 644,390,846.18 to RMB 579,699,278.14 on page 21. This trend continued with a further decrease of RMB 42,491,878.07, 6.4% decrease, on page 23, and another RMB 64,691,567.04, 9.4% decrease, on page 98. Similarly, interest expenses have also decreased over time. On page 10, net interest expenses were RMB 1,013,309.75 as of June 30, 2025. While interest expenses are not explicitly stated on page 21, the changes in interest-bearing liabilities suggest a decrease. On page 24, financial expenses and interest expenses decreased by RMB 2,269,214.96 and RMB 14,757.53, respectively. Furthermore, on page 26, interest expenses decreased by RMB 6,748,492.98, current period, versus RMB 8,998,189.7, previous period. Additionally, on page 85, interest expenses decreased by RMB 14,757.53. Overall, the data suggests a downward trend in both debt level and interest expenses, indicating that the company has made efforts to reduce its financial liabilities and associated costs. The financial performance of various regions and segments was a mixed bag in the recent period. On the positive side, the Beijing region saw a significant increase of 28.27% in revenue, while other regions such as Asia, South America, Africa, Oceania, and Europe experienced growth due to international market expansion. China also reported an increase in net cash inflow from operating activities. However, there were some areas that did not fare well. The purchasing wealth management products in the Beijing region decreased by 460 million RMB. Unfortunately, no information was provided for Hong Kong, Macau, and Taiwan, making it difficult to assess their performance. Overall, while some regions showed promise, others remain unclear or underperforming. Management is emphasizing the importance of prudent financial management, aiming to balance capital preservation with liquidity and optimize returns on temporarily idle funds. The company plans to utilize a significant portion of its A share, offering proceeds for strategic projects, indicating a focus on growth and investment in key areas. That concludes the financial summary for CHUNLI Medical. Feel free to comment below, and I will be happy to answer them when possible.